Welcome to Prediction Market Movers. My name's Chris Gerlacher. I've been covering prediction markets since 2021, and we have Alex Kane, the founder and CEO of Sporttrade, here with us today. Alex founded Sporttrade in 2018, and he launched in New Jersey, I believe. Was it 2022? He's nodding. I got it right. Alex Kane has been sitting on the front edge of sports contracts before any federal company started to get into them. He's been offering sports contracts under state sports betting laws, so no one has sued him, at least to my knowledge. So we're going to get into what this landscape has looked like as it has changed completely in only a few short years. If you want to follow Alex, you can follow him on X at _Kane47. And you definitely should check out his company, Sporttrade, if you're in one of the 5 states he has launched in.
Wonderful. It's great to be here, Chris. I know you've been, I remember our first conversation back in 2021.
Yeah.
You were covering this space and interested in what we were doing and Predict It and others. And it's great to be here. It's an honor.
Yeah, thank you. Well, let me start with, let's go back to your founding. You had the option to go into crypto in 2018. The CFTC was, at least on paper, an option. You had the sports betting option once PASPA fell in 2018. What made the sports betting route look the best for Sporttrade at that time?
Yeah, so going back to our founding, we started, we incorporated the business somehow on the same day that PASPA was repealed, which is much more of a happenstance and a coincidence back in 2018. I think May 14th, was it? May 17th, something like that. May 18th. I think is the date. And our goal was to build this sort of market, right? We had the idea from the beginning of like, and it's not a novel idea. It's like we didn't come up with it. But if you can bring a lot of participants together, market makers and brokers, and the exchange can match those trades, you can build like a really, really big business. And the experience is much better for customers relative to, regular sports betting. And so we've raised, I think, about $10 million in 2020 to go and build the venue. And when we went to build the venue, we worked with an individual named John, and John was the CTO at NASDAQ for some period of time. And he effectively built us, what would have been the, island version of a NASDAQ matching engine that probably had the throughput ability of like a 2012 or 2013 sort of Reg NMS equities exchange. So think like 500,000 or 600,000 messages per second. When he built it, he said, you're never going to need anything more than that. And when we started to really raise money and put this business together, we had built it for this sort of intermediation, which I know we'll cover in a little bit. That is, we aren't just the only B2C brand that connects into this, that any broker can be provisioned a set of what are called ports. And through those ports, they can route orders. And we take those orders and the exchange matches them to become trades, and we send those back to the broker. That's how every other modern market structure works. And we had erroneously projected and thought that we could change or mature the online sports betting regimes that were happening on a state-by-state basis, because we had assumed that what would be better for the customer would be permissible by the regulator. And so in 2019 and 2020, we looked at the CFTC path. It didn't seem possible. There were things there and companies like Arisex in late 2020 that had tried to do versions of what Crypto.com ultimately spearheaded in December of 2024. But I think I was a bit bullish on our ability to convince, states like, hey, this is how the stock market works. This is how the options market works. This is how the futures market works. This is to some degree how crypto markets, although back then didn't really work like that, but are working much more like that now, ironically. And happy to get into it, but I was just wrong about our ability to convince the regulator that what could be better for the customer could be permissible. And it's really not on the regulators. They're great people. We're regulated by 5 states currently. We're live in New Jersey, Colorado, Iowa, Virginia, and Arizona. It's that the way the sports betting was created and legislated, it created a very firm box that only fit the sort of the sports book model. And
Yeah. So you thought the regulatory structure, I mean, not necessarily the regulators themselves, but the rules you had to follow would tweak and adjust as you brought this new type of product to market.
Yep. I remember we got NASDAQ to invest, and we somehow got Adina Friedman, the CEO of the company, on this meeting. I remember where I was in 2020, and I'm like, oh my gosh, I'm pitching Adina Friedman on the sort of the value of sports prediction markets. We had just brought on Tom Whitman, who is a former CEO of NASDAQ's transactional businesses, on our board. And so there was a lot of, we knew a lot of people there. Obviously, I mentioned John, who was their CTO, built our matching engine. And the first thing Adina asked me after I gave my opening pitch was, would you want Robinhood to be a customer? And I said, absolutely. This is why we're building this. And we had just erroneously assumed and overestimated our ability to show the true promise of this intermediated market structure to regulators, who ultimately ended up having to, create a set of rules that closely mimicked the legislation that was created. And it's really not on them to help create these new models. That's more of a legislative effort. And I think sports betting is painted with a very broad brush. And unfortunately, the topic that you dive into every week is a very nuanced topic. This is a very different model than house-backed, or what I like to call a carnival game version of sports betting. It's a very market-based model, and it should 100% be legislated and regulated differently.
Right. Well, explain what the exchange model offers to the customer that, the house set bet model of a traditional sports book doesn't.
So I think there's the folks that the listeners probably already know about, right? You can enter your own price. You're not going to get limited. The exchange is just a platform that matches buyers and sellers, and you can offer your own price. You can get in and out of your position. You can see the prices at which the market is willing to transact. You can see the prices at which the market has already transacted. It's a more fair and efficient platform. I think folks, for the most part, you've covered this for a long time. They probably know that. The thing I'd like to add in terms of why is this truly different? Like, why is Alex on Twitter saying, no, this needs to be a different regulatory model? And that is this concept of intermediation. And that's truly how an exchange works. That when you go and look at your 401k, or when you go and make a stock trade, or when you go and make an options trade, you're not logging into the New York Stock Exchange. You're not logging into NASDAQ. You're not logging into MEMX. You're not logging into CBOE or CME. Those are the exchanges. Those are the platforms that match buyers and sellers. What you're logging into are what are called intermediaries, or brokers, front ends that control that user relationship, understands you very well, can offer you a very wide range of products across a lot of regulatory verticals like options and crypto and Reg NMS equities and now sports. Build the experience the way that you feel comfortable because of the type of customer you are. And ultimately, you don't really care where that order is sent or executed. You care about the price you got and that you have your fill. And so what this modern market structure presents now to the existing sports betting ecosystem is one where many brokers, not just Robinhood or an Interactive Brokers or a Coinbase or a Kraken, but potentially a Fanatics, a DraftKings, a FanDuel, an Underdog, a Prize Picks, Fliff, ESPN Bet, Bet365, Hard Rock, can all build their own interface, still control that user relationship, and ultimately route these orders to an exchange. And so an exchange, think of it as the epicenter of this modern market microstructure. And all its job really is to match buyers and sellers. And what it does is it gets market makers to supply the liquidity, and it gets these intermediary brokers to provide the price-taking liquidity, the demand, and make trades. And so that's what's so different. That's truly what's the difference between an exchange model and a sportsbook model. That's the difference. This idea of intermediation, that there's a lot of different businesses that each touch a part of this value supply chain, each adding value, transparency, fairness, legitimacy, consistency, in a way that a sportsbook model could never provide.
Right.
Does that make sense at a high level?
Oh yeah, no, that makes a lot of sense. And how is the state sports betting regulatory structure stifling these types of innovation? Because I know that's been a point of friction with you and some of the regulatory issues you've had to bump up against over the last few years.
Yeah, so I think if you were to just start, with a glossary, right, of like, well, how does this modern market structure work? Like, what are some of the key players and key terms? You'd see words like a broker, right? That's what Robinhood's doing right now. They're routing orders to, Forecast X for political stuff and to Kalshi for everything else. You would see words like a clearinghouse, right? The entity that sits next to the exchange, looks at all the buyers and sellers and holds all the capital and makes sure that everyone is paid out in an orderly and fair basis. You'd see words like market maker, exchange. And when you look at the state regulatory rules of any one state, those words don't even appear. So like you could just stop right there and say, wait a minute, we're not even covering the glossary of the key players of this modern market structure. And if you Command F in New York State's or New Jersey's or Iowa, I'm not calling any state out, they're all very similar, and type in the word broker or clearinghouse or market maker or bid or offer or order book or exchange, you wouldn't find them. And so it is purely just not contemplated at all, is I think the first place to start. More practically from our perspective, where did we try to grow the market? Exchanges required liquidity from what are called market makers, and market makers can, in an algorithmic basis, supply bids and offers to an exchange and receive fills and move their markets around. But they really are facilitating transactions between what are called natural buyers and sellers, and they stand in a synthetic way in the middle of those transactions.
Somebody needs to take everybody else's bets.
Exactly. And you might want to take the Chargers and I might want to take the Chiefs, but we might want to take the Chargers and Chiefs 5 minutes apart. So who's going to effectively stand in the middle of that? A market maker helps to do that. In addition to market makers, you might have individuals that may want to play that role or put in a bid or offer on one side. And this ability to algorithmically enter orders in a mass quantity in an electronic way is critical. And in trying to bring that model to light in the regulatory environment, again, regulators are creatures of statute. I was told this 5 years ago. It is true. They are creatures of statute. The problem is the words API or algorithmic or market maker don't appear in the statute. And so it's been impossible to bring that model to bear. So what do you have? You have a company like Sporttrade operating in the state of Arizona, where Kalshi is available, and many other types of models where someone that's a smart guy or gal that likes betting MLB totals and thinks they could build some sort of model that looks at Pinnacle's bid and asks price and replicate them on an exchange, they can do that within days on Kalshi. Yet on Sporttrade, who has tried to do this the right way and pay the license fee and pay the tax and create that relationship with the regulator, has just been told, sorry, we can't help you. I don't know how that fits within the statute. And my job as a regulator isn't to come up with completely new rules that might conflict with what the legislator has passed.
Right.
And so we just find ourselves in this impossible position of like, dang it, we tried doing this a certain way. We tried doing it in a way that we felt was fair and transparent and honorable in a lot of ways, and doing it the right way. But the further we got down that path, particularly against the juxtaposition of this CFTC regulated model, we're finding that it's just impermissible. And that's okay, by the way. I think the world is about middle grounds, and I think there is going to be middle ground here. The single dealer, player versus house sort of sportsbook model, for better or for worse or for customers, and some customers certainly prefer that model, and it generates a lot of tax revenue, should continue to be regulated by the states. That is where they're experts. They understand it. How do we know they understand it? Because all the key players, the glossary of how a sportsbook works, exist as words and are defined in the sports betting statutes and rules.
Right.
But this market-based sort of intermediated modern market structure-esque type model is not contemplated by the states. It's not allowed by the states. It can't be facilitated by the states. So let that model be regulated by a set of regulators that have existing statute, the CEA, that does describe what is a bid, what is an offer, what is a clearinghouse. And to me, it's very simple. And I think the world's about middle grounds. I think that that's the middle ground that we're going to end up in.
Sure. And fast forward to April 2025, you send a letter to the CFTC. It's a public comment on prediction markets, and you introduce your company. And near the end, you intimate that you may apply for no action relief to offer Sporttrade nationally. Has anything come of that?
So we did submit that letter. I think it does a pretty decent job of explaining what I just tried to explain there
Right.
for better or worse in the last 5 minutes. And just it does mention that that's a strategy that we might pursue. I think for now, we're not exactly sharing, totally what our strategy is, but I think you can tell by virtue of my tone on this call that I do think that ultimately, whether statute changes or regulation changes or simply court decisions are going to place the regulation of these sort of sports event contracts and prediction markets squarely under the oversight of the CFTC. And that's a world that we would champion because we have tried in other regulatory structures and have found where the rock simply meets the hard place, and it's just not possible. And if we zoom out for a second, forget Sporttrade. Sporttrade is just a bunch of people, and it's just a bunch of people that really love creating the best possible experience for consumers. CFTC regulated regime is far better for consumers as it pertains to this marketplace type model. So that is a world that we are certainly pursuing. Don't have anything in terms of to share in terms of like a launch date or strategy with regards to a no action letter, but I think the viewer and the audience might assume, and they'd be correct in assuming that that is a world that we would like to at some point enter.
What is it about the CFTC that makes it so attractive as a regulator? Not only for your company, but also for what it can offer for consumers.
Yeah, so I think that we have a small, David, our COO, and I have a small publication called Bullish Predictions, where we write about stuff like this, where we sort of compare and contrast the regulatory approach between states in their totality, which is a bit of an overstatement, but most states do things the same way with regards to OSB, versus the CFTC across many different cross sections, including like self-certification, responsible gaming, intermediation, innovation, go-to-market, all these sort of things. And I'm not going to sit here and say that it is lock, stock, and barrel, the perfect regulatory regime, and that there's no holes or gaps in the approach. I think responsible trading comes to mind first as something that probably would need to be codified a bit more. But again, I think the types of people that are going to enter this market are mature businesses. And I think mature businesses understand the right way to do business. And I sincerely hope that those that don't are shunned and shamed and are forced out by louder voices, and that cooler heads will prevail. So why do I think the CFTC is a better regulator? I think, they are preconditioned to understand markets, marketplaces, exchanges, and intermediation in a way that is foundationally important relative to, it would kind of be like if I said, who's better at regulating like a physical craps table? The CFTC or the Nevada Gaming Control Board? Like, you would be absolutely out of your mind to say the CFTC. Nevada Gaming Control Board has 50 years, 30 years, I'm not sure, experience understanding every last thing that needs to happen in order to facilitate a fair craps game, including the dimensions of the dice, the dimensions of the table, exactly how big the squares and the felt have to be, how many players can be playing at the same time, how the dealer and the shuffler keep things fair, the types and specs of cameras that have to be pointed at certain angles to make sure that instant replays can be looked at and understand whether a fair game was facilitated. It would be absolutely asinine to suggest anything else. I think the equal is true to say that the Nevada Gaming Control Board should regulate these types of markets, because the same thing is true of the CFTC. They are regulators that not only have a founding and enabling legislation in the form of a CEA to describe how these types of market participants are to be licensed and interact and report and all these sort of things, but that there's also an innate understanding of what is an exchange, what is a bid, what is an offer, what is a market maker, like we discussed. So I think it's not too philosophical a view. I think it's more who should be, regulated to, oversee like cars. Well, like the car regulator, like who should be regulated to oversee casinos, like the casino regulators. Who should be who should be overseeing the regulation of marketplaces, like marketplace regulators. I really see that much of a difference between maybe what a Fanatics or an MGM or a 365 offers versus what a Sporttrade could offer, or what a Kalshi currently, or what a Crypto.com currently offers.
Right. In a world where you're able to be regulated by the CFTC and receive no action, would you want to move beyond sports, or do you think sports is the best niche for you?
I think that there is a wonderful amount of interest from a retail consumer perspective in sports events. I think there's some wonderful work out there detailing out. Dustin does some good work on this. Adi does some good work on this, of like just how much of the volume percentages are happening in sports on these sort of event contract market. I think there are some interesting, event contracts. I think, like labor numbers, unemployment numbers are like interesting to me. Bitcoin, how will it go this year, this month, are super interesting. I think, as it pertains to like our strategy, I don't want to get too far into it, but I think Sporttrade and who we are rather allergic to the types of markets where the result either is already known, could already be known, or is likely to be known by some subset of participants ahead of everybody else. And I know that's an unpopular opinion. And I know people love trading, what will so-and-so say today. Right. But unfortunately, like that person already knows what they're going to say today. And so it's either always going to remain a novelty market with very low liquidity, or at the point where the liquidity becomes very exciting, unfortunately, there's a direct correlation between the liquidity being exciting and the incentive increasing for those that may already know the result or the information to potentially manipulate or corner that market. Right. And when you think about like what is the job of an exchange, at the very simplest sort of level, the job of the exchange is to price trades between fast and slow participants, between informed and uninformed participants. That's the job of the exchange. If it can't do that, it can't be this hallmark of fairness and transparency which is its rightful place in this ecosystem. And so we look at all the stuff that's listed out there between these regulated and unregulated markets, and I think we look at a lot of them and say, hey, this market can't be taken seriously. It can't be sustainable. It can't grow if we are, and I'm not going to call anyone out because it's not our style, but if we list the types of markets and at the same time ask to be taken seriously, because anyone with their head screwed on straight knows that some of these should absolutely never see the light of day, because it's just impossible to effectively surveil those sort of products in a way that you could, in a common sense form, tell a customer this is a fair market. So we would stay away from those sort of things. Sports are excellent, sort of structured in a way that everyone's going to know who wins the Super Bowl at the same time. Right. Everyone's going to know who wins the today's Phillies game at the same time, or whether a run is scored or not. Now,
it's not under the control of just one person either. The whole team has to come together, and there's still plenty of uncertainty there.
Totally. And it doesn't mean we wouldn't take market surveillance very seriously. We were the first, I think, sports betting company in human history to adopt market surveillance within the regulatory regime of a sports betting ecosystem. And that we were never asked once by any regulator what that does or what we do with it, or because it's just, again, it's not in their purview. It wasn't detailed and delineated out in the statute. So
that part's really interesting too. Can you explain the difference between the routine data sharing that sports betting companies have to do with leagues and the market surveillance that you do?
Yeah. So what is mandated? And again, this is an area actually where states are very different and potentially another benefit of a federal approach, right? We
Mm-hmm.
have, there's a lot of advantages to things like responsible gaming being mandated by states, but there's a huge disadvantage to it being mandated by each individual state. If I self excluded New Jersey, I could just take the bridge over Trenton into Fort Washington in Pennsylvania, and
Mm-hmm.
then like no one could the same way no one can look at some of these markets that are being listed by prediction markets and think it's a legitimate business. The same level of common sense would tell you, wait a minute, it's almost irrelevant that a consumer can simply cross a bridge and completely shed their responsibility that someone higher up has to self-exclude that person. That's why at Sporttrade we do it globally. So if
Mm-hmm.
someone says I don't want to play and I want to self-exclude through the state, some states have this, other states don't.
Mm-hmm.
We take that to mean like you're never going to trade on Sporttrade again, sort of
Mm-hmm.
thing. We just say, states don't have an impact on whether you feel like you should get self-excluded or not because the state border is a completely arbitrary line.
Mm-hmm.
So this is an area where states are different. Some states require the ingesting of a list of prohibited participants that could be like league trainers, team owners, team players, staff, coaches. Some states require that, some states don't.
Mm-hmm.
Some states, I believe, require the collection of this. I think most of these states require the collection of this data
Mm-hmm.
that could be given on an anonymous way to a third party. So there could be an alert that a state might trigger where it requires the operators in that state to share all the bets that were made on a given event through a given time with an independent body.
Mm-hmm.
I think where market surveillance differs with that, market surveillance is like maybe what I just described as like the horse and buggy version of things.
Mm-hmm.
And market surveillance is like the flying car version of it, where
Okay.
exchanges have a duty to integrate market surveillance as part of their overall platform. So what's really cool about some of these platforms, NMS has one, Eventus has one. There's probably 5 or 6 competitors, NMS being NASDAQ, which is the platform we used, where you can set up all these real-time alerts and say, I want to create, like if someone keeps like spoofing the market or layering the market or putting a bid in and canceling, putting a bidding and canceling it to see if they can't get the market to artificially move up to then sell into that market that's artificially moving up. And I want to create an alert when that happens, and I want to get a report presented to me in a T+1 basis so I can take action.
Mm-hmm.
Exchanges have the ability in some cases to fine its participants. That would never happen in
Mm-hmm.
regulated OSB, where everything has to be done by the regulator and go through a single sort of single threaded machine in a way.
Mm-hmm.
In these sort of more intermediated modern market structure, the exchanges can look at something and say, wait a minute, I have something where like 2 customers are self-matching, and is that money laundering? What's going on there? Someone's spoofing the market. And then as the market matures, more of these brokers are going to adopt something similar to what some of the state regulated OSB operators have, which is I want a prohibited list of patrons.
Mm-hmm.
So that when someone goes to trade the Eagles, I've already cross-referenced that customer to know, like, and I've done proper sort of checks so that I don't have any false positives that person probably shouldn't trade. And that might be something that could be codified in what's called a member agreement between the DCM and an FCM or a broker. So this is where, again, people like to point at these things and say like these regulators are completely ill-equipped to do this, and like it's fraught with all this sort of fraud. And I think the reality is when you present a federal market opportunity with numbers as big as what we're talking about, with all this competition that's going to shred the margin down to a tiny, tiny, tiny percent, you end up getting companies like DraftKings and FanDuel who are hyper regulated, and Robinhood and Coinbase who are hyper regulated, and companies potentially like CME and CBOE who are hyper regulated that are going to end up creating mechanisms and controls that are going to far exceed the ability of any one mandated thing that we had to do in this sort of patchwork confederacy of regulated OSB. And so I think it's easy for people to point at that. And when you're presented with that, you just have to have a conversation with that person. And then you realize the real reason they hate all this isn't because of customers, isn't because of market surveillance, isn't because of fairness or safety or transparency or doing what's right. It's likely that they realize that our margin is going to go away in these sort of single event trading, that we're going to get something far better for customers, and it's going to be far worse for casinos and those that benefited from this sort of regulatory capture that we saw on state regulated OSB.
And what do you think is next for the prediction market industry? I know you've been looking at it quite closely, but for better and for worse, what new innovations do you think are coming, and what dangers do you think are lurking in the near future?
So I think I'll start with the dangers. I think that in the same way I presented this sort of story and this argument that a market is very different than a single dealer sports book, that a regulator that understands how a casino works and a craps table work is very different than a regulator that understands how a market works. So it's almost a little bit like oil and water. And now, having spoken to both for so long and invested a lot of time, I can tell you it's true. I think the same is true of private enterprises and businesses. And my sincere concern is that there are potentially those in the regulated or unregulated OSB world that are thinking, great, this is a way for me to operate the same way I was currently operating with the exact same model in a federal basis, which is wrong. It is not possible. There is no single dealer, wholesaler, broker dealer type license category within the CFTC. It relies on this concept of intermediation, which is great, which is unbelievable for the customer. It cannot be overstated how great that is for customers. So whereas a sports book can ban customers, choose its own price, give different prices for different customers, not compete with other market makers, that's never going to happen in the CFTC regulated world. And so my sincere hope is that those that are looking to enter this industry do it thoughtfully, and as opposed to trying to pave an entirely new way of just trying to effectively offer a sports book, which can never really happen at a CFTC level, or even worse, a casino or any type of casino games, never happens, because that's not what the CFTC was created for.
Right.
It begins to exceed the oversight and the knowledge of the CFTC that we could all basically understand. There are certain surveillance requirements that would be unique to a sporting event or sporting game, and I think that's a step or two. That's a crawl for a regulator to get there. I think figuring out some way to effectively offer slot machines federally would be disgusting, deplorable, reprehensible, and those types of products, if they ever see the light of day, should be publicly called out, and those people should just go back to an industry that maybe better suits them. So I really am scared of potentially that sort of thing.
Right. You don't want to see a casino live stream or a slot machine live stream with a prediction market on it.
I think that would just be reprehensible and disgusting, and antithetical to what I think the right people are trying to create in the industry. And you know what? I think there are certain people that are going to try to do some version of a casino-based something, and I really think that states and state regulators are the masters of this, of understanding exactly how a slot machine works, or a roulette wheel, or these sort of things. So I'd be really concerned with that level of expansion in the wrong direction. In terms of what I see from a positive perspective, I hope to see way more participation, which I think is happening from an intermediary basis. I think you're going to see all sorts of brokers begin to enter this space. Given that DCMs in a lot of ways are like SROs, self-regulated organizations, I'd like to see a modest amount of policing around, how brokers introduce the sports and event contract products. I'd like to see those intermediaries at a bare minimum offer the ability for their consumers to limit their use of those products by time or by dollar amount.
Mhm.
I'd like those brokers to offer the ability for their consumers to completely opt out forever and ever, or for some period of time, for those types of products.
Mhm.
There are consumers on platforms like a Robinhood or a Kraken or a Coinbase that should not be given unfettered access.
Mhm.
Um, in a way that maybe otherwise they would have indicated they would like to have some sort of control over their play, I think
Mhm.
is very, very important. And so I think what I'd like to see is more participation in a way where folks are making critical and thoughtful decisions about how this can become a sustainable market structure. In other words, I'd like the adults to continue to enter the room and do this the right
Mhm.
way. Um, and if that happens, I think we will see a market structure beyond the Trump administration, across any sort of political party that will exist. And ultimately, what will happen is that in 5 years, someone could open up any old app, feel protected in their ability to control their use of event contracts. But for something like the Eagles Cowboys game, they're going to pay 1/10 of 1%, which,
Mhm.
by the way, is 45 times less than they pay now. And that is an excellent thing. And anyone that stands in the way of that sort of progress doesn't care about the customer. As
Mhm.
long as these intermediaries and the exchanges, and to some degree the clearinghouses, continue to advance a fair market structure that can
Mhm.
allow this to be sustainable and to exist. And so that's my hope. That's
Mhm.
my vision. I think Sporttrade could be a massive part of that.
Mhm.
And I also hope, on the other hand, that there aren't participants that sort of coerce or co-opt this market structure to effectively build, an unregulated casino, because I think that would
Mhm.
be, reprehensible.
Yeah. Two very different looks at the future, but Alex, we always love to have your perspective. Thank you for coming on. Anything you want to plug before we sign off?
No, I Sporttrade is still up and running. And we're still
Mhm.
trying to improve the product. I think having a B2C product is still always going to be an aspiration of ours. And anyone out there that has feedback, we just offered charting, which is we've gotten some great feedback on.
Mhm.
Not even to use the product per se, but just to understand how it works. We'd love folks' feedback. So you can find us at Sporttrade on the App Store, Google Play Store. We're also launching a web platform, I think tomorrow in New Jersey. So
All right.
yeah, come check us out.
Awesome. Well, Alex, thanks again for being here.
Thanks so much for the opportunity, Chris. It means a lot.